reason is I want to get out of Dodge. I think America's got some serious, serious problems that we're going to be dealing with, and I think the only solution is not to have your money in U.S. assets. So when I'm buying foreign stocks, I'm buying it through that prism, whereas your average mutual fund isn't. They think everything is great in the U.S., so they probably don't think having a lot of exposure to U.S. consumers and U.S. borrowers, they don't see the problem there.
Right, and the reason I'm asking is I'm trying to find the most pure play that I possibly can.
Well, I think the purest plays is what we're doing, just buying foreign stocks outright that trade in foreign markets that earn all their income outside the United States, or only a small portion in the United States.
Because even with the Fidelity thing, I mean, aren't I technically I'm still holding dollars, aren't I?
Well, not if they're in foreign stocks, but then also you have to look at their hedging. A lot of some foreign funds ends up hedging back to the dollar. So, obviously all of the Euro-Pacific capital portfolios are unhedged. That's not the case with most mutual funds. But anyway, I got one more call that I want to try to take, and then we'll be done for the day.
Thank you.
All right, let's take the last call of the evening. Rob from Oregon.
Hi, Peter. I appreciate you taking my call.
Sure thing.
This is actually, most of what you're talking about is fairly new to me. And although it makes a lot of sense, I saw a video called Crash Course on the Internet that got me thinking. So the last 3 weeks I've been working with some people of yours in Southern California to try to move some accounts over to Euro-Pacific. And I'm actually doing some stuff for my mother and my sister and myself. All told, but between all of us, we have about 1.4 million and about 10 different accounts, lots of retirement accounts and annuity and other stuff, so it's a little bit tricky to get it all moved over. Based on reading your book, I read much of your first book. You seem to be like 100%. Let's move out of the U.S. dollar. Even while talking to some of your brokers, they seem to be a little more, a little less. They're not pushing anything on. I guess my question is, my feeling after.
Well, we don't want to push anything on anybody. I mean, people have to make their own decisions as to what they want to do with their money. If they believe what I'm saying, if they think maybe I'm right, it just depends. It's hard to tell somebody. You got to decide what you want to do. You got to examine the facts. You got to take a look at what I'm saying, and you can look at what other people are saying. You can draw your own conclusions. I mean, I've said personally, I think the dollar's going to collapse. And it doesn't make sense to own dollars as far as I'm concerned. Now, in the short run, sure, there's always a chance the dollar could go up, like it's going up now. But I don't invest for the short run. I don't have time. I'm not a trader. I'm earning in the short run, I work for a living. And what I do is I take the money I don't spend, which is the vast majority of it, and I try to preserve it someplace in an investment that I think will appreciate over time, and it will provide me with a dividend stream. And I don't have the time. If I spent all day long trying to figure out what the markets are going to do on a day-to-day basis, I wouldn't be able to do all the other things that I'm doing, which I think are more valuable.
Right. Well, actually, I think in many respects you're a little more optimistic than me. I happen to have a biblical perspective, which means that at some point I think maybe there is going to be, I understand that you're not, you're certainly not a conspiracy theory type person. I'm a little concerned about the fact that I believe it's possible that maybe there are forces that might cause the entire,
Well, if that's the case, we're screwed no matter what we do.
Well, that's so that's basically why. Exactly. So, but I did have a couple specific questions that I was, thinking. First of all, actually two. Is it why? And I'll ask both of them up front here. Is it reasonable even to borrow? I own my home outright, and supposedly somewhere around, I could probably get $350 for it at the moment. Is it reasonable to take out a loan against it, even for the next couple of years or whatever? I've got a line of equity. Would it be reasonable to do that, or is that too risky or dangerous? The other thing I have is my mother has a variable annuity. It's got a cost basis of about $100K, but it's up to $330 now. Her health isn't so great. She'll probably never need to use it. There won't be a step up in cost basis, because it's an annuity. I'm wondering if I should we should talk about it and take the $100K.
Yeah, talk to one of the brokers. My view of it is, potentially, I don't want to annuitize a stream of dollars because I don't have any confidence that there's going to be any real purchasing power there in a few years. So if it were my money, if it were my mother, I would advise her to either try to transfer it to an annuity where she can make some international investments or some foreign bonds or something like that. If she can't find one that's there, to just pull it out and invest the money along the lines of, where I think she can get real income and preserve her wealth. Because, the way this thing and the way I look at it, all these government bailouts and all these stimulus plans, and none of them are going to work. They're just going to keep passing bigger and bigger plans, and as the economy gets worse and worse, all they think of is, okay, the stimulus wasn't big enough, we need a bigger dose. And they're going to keep spending and spending and spending, and when the world won't loan, they're going to print and print and print to finance it, and all of these bailouts and all this stuff is going to be paid for on the backs of people like your mother who have a few $100,000 in an annuity that's now going to be worthless because the government is stealing all that purchasing power and spending it to try to stimulate the economy. Like the economy, they keep saying I heard someone on CNBC say we got to jumpstart the economy. Like it's a car. Like you can just jumpstart it and get it to go. You can step on the gas and make it go. It doesn't work like that, all right? There's no button the government can push to get the economy to work, right? The economy is only going to work if the government gets out of the way. And if they get out of the way, then we the people can make it work. But we're going to have to save our money and produce and work hard for it to work. There is no miracle and there is no quick fix.
What about borrowing against the home value?
Well, again, that's something, certainly, interest rates are really low right now. If I owned a home, which I don't, I'm renting. If I owned a home, I would try to borrow as much money against it as somebody was dumb enough to lend me. And I would take that money and I would invest it in things around the world that paid me much higher dividends than the cost of borrowing that money. That's what I would do. There are risks in there. People have to decide. Maybe it's better just to sell a house and rent if you can find a buyer. Although right now it's very hard to find a buyer. You'd really have to slash your price. It might be better to take the money from the banks if they're still giving it away and do something more productive with it. But again, there's always risks involved in doing stuff like that, and people have to decide, what they want to do. I can't make that decision for people. Have to do what they're comfortable with. Right.
Now, now at this point I have a line of equity which has a variable rate. Would that be a...
That's a little bit tougher because, what would happen, let's say interest rates went to the stratosphere and all of a sudden we invested in foreign stocks that were yielding, let's say 9 or 10% or 11 or 12%, and that was great when your mortgage was 7%. But if your mortgage went to 20 or 30% because it was variable, and all of a sudden you have this huge negative drain, you might have to sell the stocks. And what if they're down? So it's much better to do it if you have a fixed cost. If you can lock in 6 or 7% for the next 30 years, obviously that makes a lot of sense.
All right, thank you very much. I appreciate it.
Thanks for the call. Yeah, we've got about 2 minutes left. Anyway, also, I had a story that was quoting me again in the San Francisco Chronicle talking about this new plan. Again, I think I mentioned it last week, where the government's basically going to let anybody who can't make their mortgage payments, if you quit for 3 months, they will reduce your principal or reduce your interest payments or extend the term so that the mortgage payments themselves equal no more than 31%, I think, of your income. They want to get 38% total with all your taxes and maintenance fees. And my prediction was this is going to create a mass delinquency as millions of homeowners want to sign up for this biggest government giveaway of all times. It's bigger than the land rush where, the government is going to literally chop, your mortgage payment in half. They're willing to take the interest rates down to 3% and extend the terms up to 40 years and even rebate some of the principal in order to keep you in your home. And that's a powerful incentive for somebody to stop making their mortgage payment. And in this time, a lot of people are going to take them up on it. Anyway, thanks again for tuning in. I will be back again next Wednesday for another live episode. Make sure to visit my website at www.europac.net. Buy your copy of Crash Proof, and if you haven't bought my new book yet, the little book of bull moves and bear markets, buy that. Those books are still number 1 and number 2 in investments on Amazon. It's been that way at least for the last month, so they're selling strong. And that's it. Remember, try to watch that YouTube clip and send it to as many people as you can. I'd like to see if we can get that thing up to 1 million views if possible. It's certainly got some momentum. Anyway, thanks again. I'll be back again next week. Oh, remember, 800-727-7922 is the number to call. So long.